Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Seresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for December 6, 2010. This is Patrick Seresna. As always, we start off with a chart of the S&P 500 using that SPDR's exchange traded fund symbol SPY. We identified over the last couple of weeks that we were expecting a flagging formation or profit-taking cycle that would have the market drop about 5%. We were already at the 5% level, and more or less we were suggesting that a break of that 118 level could have us consolidate a little bit as deep as even the 114, 116 area on the downside, but basically suggested that any market that reverses out of the flag and particularly can break above the previous highs around this 122, 123 level would immediately open the window for a continuation rally to the upside. We've now seen that with 3 very strong days, including the market successfully brushing off bad jobs numbers. Really at this stage, the window is open there. Obviously, there could be 1 or 2 day market pullback just because of the strength of the last 3 days. But overall, any break to higher highs should see us pretty quickly up to the 125, 126 level this week. Really in the bigger picture, maybe targets into January could be as high as the 129, 130 area, but we expect at least an initial rally to make it up to this 125, 126 area. Then we could probably see a little bit of consolidation before the market may want to continue higher. The only way that we would have any bearish inclination on this market would be if this market immediately reversed off this level and wiped out the last 3 days of rallying. If we found ourselves back at the 118, 119 level, we'd have to revisit the idea that this could have actually been a double top and that the market may be going through a much deeper consolidation. But we don't think that is the likely scenario at all. More than likely, this is a very bullish scenario, and we're expecting the markets to continue higher. Next here, I want to take a look at the ISE U.S. Regional Banks Index, which is symbol JLO. We redefined those support resistance levels down below because with us breaking down to about the 21 level before that very bullish reversal based on the whole market rallying, it's clear that now all the major lows on the regional banks all occurred down in the 20.5 to 21.5 area on the downside. So we're going to define that as a big wide support line on the downside. At this stage, we're now heading right back to the top end of those consolidation points around the 23.50 area. We still consider this regional banks index to be relatively range bound and still not attracting a lot of money at this stage because a lot of the investment managers that are chasing the market need to be in asset classes that are actually participating with the market. So regional banks sort of has been getting a little bit of a black eye that way. But nonetheless, if we see good, healthy price action develop over the next couple of weeks, we could see a turnaround in this index, but I don't want to make any assumptions just yet. Let's see how well the price action develops over the next little while. Next here, I want to take a look at the ISE Syndex, which is symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And again, we saw the profit-taking cycles do a very good job at not actually breaking down to some of the measured move targets. Some of the retracement zones and zigzag patterns were targeting moves down to even the 121 to 123 area. But essentially, the market, when the market reversed here, this kind of flagging formation, it could be even called a triangle, whichever way you want to look at it. The candles are breaking higher on the pattern. We're now heading right back up to the previous highs, and the highs of the last on the weekly charts have actually been as high as the 136, 138 level. So any break here could have us coming up there and testing that high zone up along the upside here. Now this index has moved quite considerably in the last little while, so we're not not particularly expecting the next move to be very, very strong. We think that that upside target of 136, 138 will probably be met with some distribution up there, but at this stage there's no denying that there is some upside. Next here, I want to take a look at the ISE Home Builders Index, which is symbol RUF. And just like the regional banks, this index has been the blemish of the markets, and more or less on the DHI earnings and a few other things, there was a reversal in those home builders on the downside. But as these home markets bullishly reversed on the upside, the home builders very quickly bounced off the bottom line support. So we've widened the bottom line support on the home builders between the 8 and 8.5 area on the downside, and that should more or less act as the bottom end of that trade range for a while. Now we've gotten all the way back up to where the market's consolidated for a better part of September and to October in that zone. So it will be very interesting to see whether or not we can actually see any bullish price action get above the trade range. If we start consolidating back above 9.5, that would again be a relatively bullish signal, as then the markets, the window will really open for a move that could be considerably higher. But at this stage, again, just like the regional banks, we don't want to be jumping on this bandwagon too early. We probably want to see another week or two of price action development in these before we start jumping on to these ones. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM. Very bullish price action here, as more or less with this flagging formation. Again, it could be considered a triangle as well. Bullishly broke out and has actually broken to higher highs. The support line at this 106 to 108 level was where all the highs came in back in June. So the fact that we're consolidating above there and breaking out higher immediately opens a window for the natural gas index to get up to the 117 to 120 area. But realistically, there is lots of room for this index to go. That would be just our first upside target, 117 to 120, looking for little flags or wedges to buy on pullbacks there. But more or less, this is a very bullish price action in this index. Some of the upside measured moves on the bigger picture charts even go as high as the 125 to 135 area on the upside, but I certainly would not be expecting this index to go in straight line up to those zones. That would be some realistic targets over the next 4 to 6 week cycle. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX. And the global markets have all positively reacted as the U.S. markets have also shown that and rolled up. Really, this flagging formation found support right at that 550, 560 area where we marked off a support line last time. Really, at this juncture, this could bullishly break out on the upside. Any breaks above the 580, 590 will really open that window for another leg higher in this. Now we have a major target up at the 630 to 640 area on the upside. That is a realistic target for a big picture. But if we do have a bullish breakout above 590, I think that the first wave of buying will probably stall somewhere in the 600 to maybe as high as the 620 area, and then on multiple pullbacks and then breaks higher would we see maybe 630, 640. So right now, if we have any bullish break above 590, 600 to 620 would be a realistic upside target. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.